them, document them. Right? And as soon as this comes up, we'll pretend that we're just starting again. Here we go. So amazing day. Yeah, let's get started. So what did we say? We are never ever going to take a trade unless liquidity has first been taken. We are never going to take a trade until liquidity has first been taken. Now over here, for example, we're looking at gold. In gold, we identified that there was this morning. We identified there were some Asian session lows. All right. So when London started, there was some Asian session lows here. Because London was this yellow box. London started over here. It just started moving down and dribbling, taking some lows. It took some lows here, but it didn't give us what we look for, which is our manipulation breaker structure, W here. Okay. And the market continued to take New York session lows. So we've taken 2 bits of liquidity. It's very greedy. Okay. And then we've seen the market come and tap into an imbalance. Now, when we see an imbalance or an inefficiency, or hear people talk about it as a fair value gap, when we see these things, okay, after liquidity, this is like the added draw. Now, I was giving you the example. It's like, I'm a thief. Yeah, I've come to take your phone. Yeah, I'm a thief and I've come to steal your phone. All right, but let me tell you something for free. If I'm patting you down to look for your phone and I see you got an iPad on you as well, I'm taking that. I mean, I'm here robbing you anyway. Whatever you got, I'm taking. I'm patting you down there and I see you got some earbuds. I'm like, I'm taking that as well. I didn't just come for your phone, but that was my aim. I'm a phone thief. I came for your phone, but whilst I'm patting you down, and I see there's inefficiency here, I see there's an imbalance here, I'm taking that as well. Am I making sense? Does my analogy make sense? Okay, this market is a game. It wants to take liquidity and fill imbalances where there's inefficiencies. These are the things it wants to do. So if we can see there is a liquidity level, but the market's taking it, but still starts dripping through, we must look left and see what else is over here. What other items does this person have on itself to be able to, that it wants to take? What other items, what other things does it have over here for this market to potentially take? Oh, there's some imbalance as well here. Okay, we're going to wait to see that imbalance. Have a look how that market comes, takes the liquidity, taps into our imbalance, makes a manipulation W in here. If you look at it on the 5 minute, you can look at it on the 10 minute, you can look at it, we're not quite on the 15 minute yet, candle still pushing. All right, you can look at it on a smaller time frame, taps into that area, okay, and then has a reaction from there after taking out the liquidity. Now we're all the way back up to the level of where the liquidity was taken. All right, the question is this market going to continue to push up and break bigger structure? Are we going to break this structure here, okay, which is in the top of the range? Well, this is the question. At this point in time, to be perfectly honest, my trades are completely risk-free. All right, and I'm looking at it. I'm looking at, now we've taken this liquidity from here. Does this market want to push to the other side? Because if we believe that liquidity is the driving force in the market, the magnet to price, does this market want to push all the way back up here and take Asian session highs? Maybe continue pushing up and go and take New York session highs? This is the question that I'm asking myself on a shorter time frame, because liquidity on a shorter time frame is our driving factor. Okay, does this market want to push all the way, all the way up here and come and take these New York session highs? I don't know. But at this point in time, it's with God. My trades are in the blue, and let it do what it does. All right, let it do what it does. Yeah, we have to understand that obviously we have our targets. I definitely have my targets on areas that I'm looking at where I want the market to to take price to. Yes, for sure. However, once I take my trades, because I've had a reason to take my trades, and my trades start to do what they have to do, the rest is on God. It's got nothing to do with me. I leave the markets to play out. Yeah, I can't sit here and pray and this and that and the other. No, I have to leave these markets to do what they want to do. All right, that's why I manage my risk. That's right. First and foremost, I am a risk manager. Because once I manage my risk, the rest is on God. All I'm here doing in these markets is taking shots. That's what I'm doing. All right. So let's compare this to, let's give another analogy. Let's compare this to football, for example. Like, am I going to score more goals, even if I am the worst striker of a football? Am I going to score more goals than Jason, who is a defender, and he's taken no shots? But he's an amazing shot. He can strike the ball sweet. You know when you connect with the ball, anyone who knows who ever play football, when you connect with that ball and it just licks your foot and it makes that sound. Doosh, just slaps. You know that sound when someone toe punts the ball, or you know that sound when somebody ain't quite connected. But when you connect with that ball sweet and it just slaps the ball. Slap. That's how Jason can hit the ball. But he's a defender, and in today's match, he took 0 shots. I don't connect with the ball that sweet. My technique's actually slightly off when it comes to shooting. It's a little bit off. You know, it's not quite as, beautiful as it could be. It's a little bit off my technique. But I have taken 100 shots. Who do you think is going to score more goals? Who do you guys think is going to score more goals? Obviously, it's going to be me with my poor technique. So therefore, if I'm out here taking shots, the only thing I need to do, I need to make sure that I've got enough fuel to take those shots. Do I have enough fuel in the tank to be able to take those shots continuously? This is the only question that one has. Yeah? Do I have enough fuel to consistently be taking these shots in the market? Fuel is your risk management skills. Because if you are a poor risk manager, you do not have enough fuel to do so. As a poor risk manager, you're going to take one big shot, and then you're not going to be able to live to fight another day to take those 100 shots that I've taken in the game to actually score the goal that wins the team the cup final. Because you just put too much into one big, massive shot. You didn't think to yourself that you might miss that shot. You didn't think to yourself that, you know what, true, I might miss that shot. Let me not, let me hold something back. I just went whole hog and just went nuts with one big shot, broke my hip, with everything. I can't take no more shots. They got stretching me off. How am I going to win the game for the team now? I'm useless. Yeah, I am useless. Don't be useless, guys. Understand that this trading thing is, yes, we need skill. Yes, we need to have some sort of edge. I agree. However, ultimately, we are just managing our risk. We're managing our risk, and we're trying to put our edge, okay, to some good use. We've got a slight edge. We've got someone's given us a little bit of information whispered in our ear ever so slightly. So we say, okay, that's what you do. All right, I get it. Okay, okay. But the person said to us, if it doesn't work all the time, it just works sometimes.
You know what they're whispering?
Go on.
Don't be useless.
Don't be useless. Yeah, don't be useless. Useless ain't the lick. Yeah, do not be useless. So regardless of right now, look, I'm 4 figures. My trades are risk free. Now, if it comes back and stops, well, I've taken 50% of profit off the table, as I've told you guys to do. All right. But if this market comes back and stops me out for absolutely nothing, I don't care. I don't care, because ultimately that's God. That's God's work. I can't argue with God. I can't argue with God. Just like God didn't want me to hit. Because the markets, as we know, can do anything it wants to do. The markets are out of our control. We might think to ourselves sometimes that we are in control, but we are not in control. All right? We are not in control. We just have an edge. We have an angle. We have a thesis, an idea that, you know what we want to do is we want to do this because of that. Yeah, we want to do this because of that. And then when we do this because of that, We manage our risk and we leave the rest to God. Yeah, God. However you want to talk about God, we leave the rest to God. Yeah, we don't get involved in no conversations and no arguments with God. Yeah, we just leave the rest to God. As soon as you start trading like this and start understanding this, it's going to relieve and remove a lot of stress and anxiety from your processes, from your trading, from your experience. It's going to remove the stress. It's going to make you understand that you are not in control. So therefore, if you're not in control, how can you risk it all? How can you trade without a stop loss? I was having a conversation with somebody the other day. Yeah, they know who they are. I said, you must have a stop loss that's going to, be there to save you just in case your parachute doesn't open. When man jump out of a plane, they got a one parachute. They got a second one just in case. Man don't want to just ramp with their life. I say that, well, you're ramping your life anyway, but I'm just saying to you, you jump out of a plane, you got one, you've also got another one just in case that one doesn't open. You have to have your safety net. You've gone to the circus, man, of doing the tightrope. The only time that, it becomes extra amazing is when that person is really playing with their life. They've got no net. They're trying to walk across this rope in the sky with no net. At that point in time, yeah, you might come and watch it for entertainment, but that person's a lunatic. That person might not have anything to live for. I don't think they've got two beautiful kids at home like me, where they think to themselves, you know what, I'm not going to walk across this rope in the sky for entertainment, because if I drop, I'm going to die. I'm going to end up wheeling myself and drinking my dumpling soup through a straw. I don't want to do that. Yeah? I don't want to drink my dumpling soup through a straw. That's not cool. One second, guys. All my screens have gone off for some reason. Why have my screens turned off? One second, guys.
Yeah.
Why have my screens turned off?
You saying every time you're in profit, they just EMP your devices, fam.
I don't know what's going on. Screens have just turned off. If you can hear me, can you still hear me?
Yeah.
Yeah, my screens have just turned off.
The screens are on our screens, though.
I've got multiple screens, and all of my other ones have just switched off for some reason.
Your screen's still active with us. Still, we can still see it.
Okay.
It's gone now, though.
It's gone now, yeah?
On our screen, I think, or it might just be me. But for me, I can't see nothing.
Okay, give me a second. I don't know. This is a bit strange. This doesn't look like an internet issue. All right, so like I was saying, I'm just gonna have to work off one screen. 1 second. Okay, one of them's come on. One of them's come on over here, which is... Yeah, I don't know. One of my screens have just died. It looks like I've just had the screen just die on me. Yeah. Obviously, as I look back at my that screen, I'm seeing some retracements happening. Okay, so like I said to you, so we have to trade. So I was talking to somebody the other day, and I said, make sure you've got your stop loss in play. Somebody tried to, I had to make them understand what they was doing is that they was taking a trade, and when the trade went into profit, they was putting their stop loss to entry. But prior to that, they had no stop loss. This is not risk management. Okay. As soon as you take a trade, I've got anxiety when I take a trade of the time that that trade is running and I have no stop loss, because I know that when I take a trade, the price could spike in the wrong direction and it could lose more than I'm willing to lose. And this game of trading is about risk management. It's about capital preservation. It's about you turning around and understanding how much money you can lose, not how much money you can make. Yeah, that how much money you can make conversation is vanity. Yeah, I'm gonna make this much money. If I just hit this button here, make my lot size 1 billion lots, if this trade goes, 20 pips, I'm gonna be able to go and buy myself a house. I get you, mate. I understand. But in reality, what this is about is, what if that trade doesn't go, 20 pips in that direction? It goes 20 pips in the wrong direction. That's the conversation that you have to have with yourself. That's the real issue. All right. So therefore, if this is a game of just taking shots, all you've got to do is be able to stay on the pitch and take these, huge volume of shots to see whether or not you'll be able to score on. All right. Let's go and look at a different pair. Let's go and have a look at a Euro JPY. We're going to break it down from top to bottom for people that have not, want to grasp the strategy, understand what's going on, and see what's going on. So I'm going to go into this Euro JPY. I'm going to remove all drawings. This isn't one I made earlier. We're going to zoom all the way out. We're going to start from the top. All right. I'm fully annoyed about my other screen. It seems to have just died on me. Like, I don't know. I mean, it runs on USB, so why it would just turn off? Let me just give it another.
You saying it's not a HDMI issue or nothing like that?
I don't think so. Tapped out. Yeah, literally just tapped out. Who knows? Who knows why? Annoying. But
When you press something, it did something to this screen. Though. I don't know what you did. It's like it made it like residue or something.
did it?
Yeah, like it focused. Like it changed the dimensions of the thing or something. I don't know.
Oh, wait a minute. I might be back. I just jimmied the screens. Might be back. Maybe. Yeah, looks like I'm back.
Yeah.
No. Maybe. Okay, let me do something. I am back. I don't know what just happened there. I've got a little setup and I've got certain things going out of universal kind of extensions. And you guys can see my screen setup right now. I'm sure you can.
Yeah.
Oh, no, landscape flipped. Portrait flipped. Revert. That should be it. Yeah, that's it. Key changes. And let's move. See, I've got 4 screens. All right, that's all right. We should be all right. Thank you for your patience. All right, let's see what's going on right now. Okay, yeah, we're having a little retracement in one of the gold positions. So let's have a look here. All right. I'm watching this. I'm watching this. All right, so we was looking at EJ. We was going to start again. Okay, we was going to start again, and first and foremost, we go into our larger time frame to identify what the market's been doing and look at the larger market structure. Now we can see here that EJ has been bullish. Okay, like so. I don't think anybody can deny that. All right, making higher highs and higher lows. And then we can see the market's broken outside of that, making some lower lows and lower highs. And right now we might be making a retracement up into these levels, okay, of the market maybe wanting to do something else. Let's look at an even bigger picture to see where we are on that bigger Russian doll. On a larger Russian doll, going back into our weekly levels, all right, because the market was doing this, all right, down here on that line was a discount. And possibly up here in this kind of area is a premium of this range. Okay, all right, so let's go and have a look back to our daily. You can see this happening. Now we can see right now that the market price has broken outside of this range. I'm gonna make it a different color. Price has broken outside of this red range. Okay, and it's come up to this little level here. Now the question is this market just going to consolidate on this little level here, this little box, or does the market want to make a retracement and make a higher high over here? Let me make this box blue. Do this. All right. Does this market want to? Is this made a nice little push down here? Does it want to retrace back up in here and then continue coming down? All right. On the daily time frame, that is, okay. But if we look, because we are day traders, we're going to be taking smaller trades. We're looking at this like this. Have a look, and we're going to zoom in some more because we're not necessarily going to be sitting here for days and days and days on end for one candle to appear. All right. But the question is are we trading within this range here? Let me get to the wicks. Yeah, within this box and this box here. Or are we going to make a retracement? Now we can see just above this area of where the box is, we can see some imbalance. Now remember, I'm on a daily time frame, so this imbalance that I'm drawing here looks like a small little range is more than likely huge to us and on a small day as a day trader. Okay, so over here, remember what I said? Liquidity above these areas, and above that area, if you was a thief and you're going to go and pat down man anyway, all right, we can see some imbalance above here also. All right, so if we go to our 4-hour time frame, we're looking here, you can see certain things happening here. Okay, the question is on a 4-hour, you can see this market has made some higher highs and some higher lows. Okay, the question is the market ready to go and push up and capture that liquidity and even tap into that imbalance, or are we want to sell? Do we want to sell down from this premium down here? All right, I don't know what the market's doing. My gut says we might want to come and take this liquidity, but I do not know. All right, if we drop our time frame to an hour, we will start seeing our indicator that is showing us some different things. All right, our indicator is showing us some different things. It's showing us our session highs, our session lows, on what days of the week it was. That's all it shows us. We've got another indicator here showing us a previous 4-hour candle. All right, just to understand what previous 4-hour energy was happening. Okay, and we're watching it, so we can see here in this current time in Euro JPY that London started. Let's drop our down time frame to 15-minute time frame. That the market already pushed through the top of Asian session highs over here. Okay, and then when London started, the market ran down here and it took Asian session lows. Liquidity was taken. We only was looking for a trade. We would only be looking for a trade after liquidity has been taken. So let's zoom into that. We might be too late to get into this trade, but let's zoom into this part here within London session when liquidity was taken. All right, go to my 5-minute, go to my 1-minute. All right, so we can see liquidity was taken below this red line here, and then we look for what we look for. We're looking for a lovely kind of manipulation breaker structure W pattern with some displacement with the candles moving in a certain direction. On a 1-minute time frame, we kind of got something here. We kind of got a little bit of a tap in. I'm going to try to see if we can find a more obvious one. This is our breaker structure. Because remember, it's not just about a W. It's about location as well. This W formed, have a look here. You know, this W formed nowhere here, nowhere here, nowhere here, nowhere here. We take liquidity and all of a sudden we see a W breaker structure forming here. All right. And when we look at the wicks, I'm going to go on a 2 minute. Nothing to really see on the 2 minute or a 3 minute. So here on the 1 minute, this is the best we're going to get. This is the best it's given us. All right. It's the best it's given us on the 1 minute of this is our little breaker structure manipulation W pattern. It's not quite as great as manipulation as we want to see it, but I don't know whether that's a Wanda's problem or whether that's just, you know, generally how the market broke structure. This is the problem with Forex, unfortunately, is that there's many different prices that are being fed to us. Whereas in futures, there's one price, okay? In Forex, Owanda gets his prices slightly different from FXCM. FXCM gets his prices slightly different from another broker, etc. But here, I'll be looking at this W pattern and the way it pushed and broke previous structure. And therefore, when the market taps back in, like this tap back in here, or before it here, I would be in the trade for a buy. Why am I in the trade for a buy? Because I understand liquidity was swept. I understand I got what I was looking for, which is a breaker structure manipulation pattern, and the market has moved away from it. Even if I took an indication correction continuation play above this structure here, I'd still be in this trade for slightly less of a risk to reward, but I would take an indication above this structure, correction, this red candle, and then somewhere above here, continuation. I'd still be in the blue, but it would be a less risk to rewards. All right. And where would I be trying to take this trade to? Well, ultimately, I'm trying to take it to another level of where the liquidity may be. Now, in this instance, it may be a big trade. Why? Because the liquidity above the Asian session's already been taken. The next, bus stop is here is a liquidity level, and here is a previous Asian session high. Well, in fact, this liquidity level was taken. This is actually the liquidity level that drove this market to turn around. So I can get rid of this one. This could be a big trade. This market could continue to push up all the way here to 1, 2, 3 days ago, Asian session high. All right. Now, is it going to do that just in one go? No. More than likely, it's going to move in waves. It's going to move up. It's going to take a little smaller liquidity from a structure like it has just done here. It's going to retrace, close some imbalance. It's going to push back up, take some liquidity. It's going to retrace because that's how the markets move. The markets move in waves. That's what we understand, and that's what we accept. That these markets move in waves. Okay. So that's why when we take a trade, it's even more important that we've managed our risk and then we leave it to play out, to do what it needs to do. I'll tell you another big reason why we need to leave our trades to play out. We need to leave our trades to play out because we need to make sure that our winners outstrip our losers. Okay, let me let you understand what that means. If my shooting capability is terrible, and every time I shoot, I'm kind of missing, I'm kind of fumbling around, but I'm managing my risk in a way that I know I need to take 7 shots for me to score 1. Okay, I need to make sure the one that I score outstrips the 7 losses that I've taken. The one, my win-loss ratio was 70% or 30%, I should say. As in, I only win 30% of the trades that I take. The trade that I do take after taking 7 losses in a row, for argument's sake, it needs to at least be a 1 to 10 or a 1 to 7 for me to break even. Yeah, ultimately I want it to be more than that. You just have to be in that. You have to be in the game long enough to win. You need to understand. This is why they turn around. You've heard them say it so much times, and it sounds like fraff. It sounds like a headache in regards to your data. If you've taken enough trades, you can go back over your data and see what your win ratio is. How many trades do you actually have to take before you win? So if I need to take 5 trades before I win, I need to make sure that every trade I take is at least going to be a 1 to 5 to bring me back to 0. If the trades that I take, I can see 1 to 10s, when great, that's a winning strategy. I've got a 1 to 5 chart. I have to take 5 trades before I can win. And when I do take a trade that wins, it goes for 1 to 10. That means I'm always going to be up. Yeah, I'm going to be up by doing that strategy. You see, that's why I can't, if I do catch that trade and I'm in a winning trade, I have to leave it to God. Let me say that again. I have to leave it to God. Because if I stop myself out of that one trade, that's the winning one early, well, then that's the one that was going to give me back all of the pain that I've been going through. That was going to give it back to me. That was the one that was going to allow me to, get my win. All the other ones were losers. And I was saying the other day, human psychology is so mad that when you're in a losing trade, yeah, when you are in a losing trade, you will hold that losing trade, hoping it gets back to zero. Or furthermore, you're in a losing trade. You've over leveraged. You only wanted to lose $100 and you're $500 down. You start praying to all types of gods. Oh, just get me back to $100 minus. Get me back to $100 minus. It starts coming back. Minus 500, minus 400, minus 300, minus 200. Now you start thinking to yourself, this is going my direction. Yeah, you don't want to just close it out at your minus 100 as you said you're going to do. You start thinking to yourself, start hoping to yourself that that's going to go past that minus 100. It goes to minus 100, minus 50. You're like, woohoo, this is coming back. Now you're in profits, $50, $100. Now you've gone from hoping it comes back to now you're scared. Oh my gosh, I'm up now. I'm up. Should I just take the $100? Maybe I should just take the $100. Maybe I should just take these $100 because I just don't know. You're 150. Oh my gosh, $150 up. Let me move my stop. Okay, you get stopped out now for $150. Or you get stopped out for $100 or $50. So let me get this right. You let your trade go minus $500 and then stopped yourself out for $50. What was the sense in that? This is for the people that don't have a fixed stop loss, or for the people that have accidentally placed a trade whereby they've over leveraged or the stop's in the wrong place. You let that trade kick back against you minus $500, but as soon as it started going into profits, you didn't allow it to breathe, to go and run to your 1 to 5 or your 1 to 10. This makes no sense. And the joke is that though I'm saying it in this way where you're saying, nah, more than likely it's you. More than likely you've done it. You've been in a trade where you've risked a certain amount of money, $200. And as soon as that trade gets up, $200, you start moving your stop. You start forgetting yourself, let me move my stop. So say for example, you move your stop to a stop loss to entry, you use minus $198, then you get up to $150, you move your stop loss to entry, and then it stops you out for nothing. So let's get this right. You let that trade run $198 in minus for you to get up to $100 and then start thinking to yourself, now you want to secure yourself. Why didn't you secure yourself before it went to $198 in minus? You have to let these trades breathe, understanding. Look at the trade, look at the markets with your own eyeballs. At what market, tell me what pair that they can open up that it's just like this. The markets were just moving in some straight lines like this, boom. You just went from this price to this price in a straight line. No, not one. Every market does it like this. So if every market does it like this, you need to understand that at one point you are going to be in the blue, then you're going to be in the red. And then at one point you're going to be higher up in profits, and then it's going to retrace. And then it's going to be, because it moves in waves. Your psychology is battling with the fact that this is happening. The anxiety is happening. Oh, I'm so happy I'm in the blue. Oh no, I'm in the red again. I'm so happy I'm in the blue. Oh no, I'm in the red again. Oh no, I was 400 up. Now I'm 100 up. Now I'm 500 up. Now I'm all the way back to minus 0, minus 2. Like, this is how the markets move. You got to let them breathe. Yeah? You've got to let them breathe. You've got to let them live. Let them have their space to maneuver. And this is the thing. Different markets have different characteristics. You know, your gold market might have to breathe. So this might be one of your kids that move like this. Let me show you your other kid. Can't sit still. Your other kid's like this. This might be your gold market. You see? Both of them you wanted to sell. Both of them your sell was from up here to down here. Yeah? But one of them is a little better behaved than the other one. Other one's ADHD. Other one can't stay still. Other one's jumping on the sofas like he thinks he's that jump giant or one of them bouncing places. Yeah? But ultimately, in the end, they still went and sat downstairs and went and put their shoes on. Yeah, this is for the parents at home. They still went and, you know, did what you asked them to do. But one kid did it in a one motion. The other kid had to bounce off the walls, play 2 Lego, do 2 step overs, kick the ball at the wall, you know, touch the PlayStation on the way out, and then he did it. So you just got to choose whether or not you're going to get involved with a child that is a little bit more volatile, might give you a lot more joy, a lot more stress, but a lot more joy because the child's just wild, does some mad stuff. Yeah. Or a child that is maybe a little bit more boring, a little bit more predictable, yeah, and maybe doesn't give you those high highs and also those low lows of you coming in that ADHD child drew with marker pen on your wall. Yeah, this is the difference between the different markets. Yeah, this market might be a GU, this one here might be a Bitcoin. You can analyze both stuff and understand where they're going, but the volatility of one may be different to another. Now, if you understand this volatility exists, you have to let that child breathe, because they're both your kids regardless. You have to say, you know what? That's just how my other child moves. I know, man. I'm used to it. Don't worry. They'll do it in the end. They'll get there in the end. As a parent, a young parent, I've come across so many other parents who have young kids that have a concern like, oh, my child isn't using the potty yet, or my child doesn't. Like, I remember the time when other parents are stunting like, yeah, my kid already knows his whole alphabet, or my kid doesn't have, he doesn't wear no nappies yet. I don't care. What are you stunting on me for? I have not met one adult yet that I'm just talking to outside on the street and they just shit their pants. I mean, you're gonna get there at some point and learn how to use the toilet.
How random.
You understand what I'm saying? I've never been out here just talking to somebody and talking to a child or an adult that just doesn't know the alphabet yet. Obviously, if you're not trying to teach your kid and not trying to educate your kid, that's different. But everyone's going to get there in their own time. This is a big analogy. It's an analogy for the markets. It's an analogy for your own trading journey. Yeah? You might be watching another man saying, oh, look at his journey. It was so great. He started trading. You know that person. Yeah, I started trading a year ago. And, it just everything just went fantastic for me. And now I've got a Lamborghini Urus. All right, I'm happy for you, bro. Good for you. You might be this child. But you see me, it's taken me longer on my journey. And I can't watch your journey because me and you are just not different. I can't give you the kind of highs, or you can't give nobody the kind of highs that I can give. But I'm going to get to where my destination is in my own time. In my own time, I'm going to get there. Yeah, this is across the board with all markets. Like I said to you, I've never bumped into no child that is of a decent age that doesn't know their ABC. So who cares if you were saying ABCs at 3 months old or you got there at 6 months old? Who cares? Who cares if your child, you know how many kids turn around and be like, or how many mothers or parents you hear them say, oh, my child's not really talking yet. They're really concerned about the speaking. They're speech therapists for kids. I mean, maybe your child's not talking at 4 months. They're a little bit less. Their verbal skills are a little less than that, but they'll get there. There are some kids that are mute. All right, I'm not saying there ain't, but this is rare. This is the exception, not the rule. Because my kid, once upon a time, I was like, yeah, we was like, oh, my kid, he's not really talking as much. Now he doesn't shut up. Yeah, now he does not shut up. All I hear is, yeah, daddy, this, daddy, that, daddy, this, daddy, that. So it's the same thing with your journey, guys. You will get there. Keep putting one foot in front of the other. Keep doing the things you're supposed to do. You will get there. Don't watch another man's journey. He doesn't know that you've got work and you've got this and you can only dedicate this much time to it. Okay, so cool. So then you just have to be able to learn how to stay in the game. Yeah. So that you can get to your destination. Yeah. And this is what I'm saying to you with these trades. If, for example, I got into this trade down here, this Euro JPY trade, I need to understand where I'm going to take some profits, where I'm going to make it risk-free, and where I'm going to just leave it. I've got a document. You've all got the documentation. When you get to a 1 to 3, your trade should be risk-free and you should have taken off 50% off the table. Let me say that again. When you get to a 1 to 3, your trade should be risk-free, meaning your stop loss to entry, and you've taken 50% of your position off. You've taken partials. And then you're going to let the rest run to a 1 to 10. Yeah, or up until significant structure. Because if you do that, then each time you're taking a trade, you should be bagging about 5% if you was taking 1% trades. Yeah, if you're not taking 1% trades, it's a bit less than that. But either way, that's how it goes. Now, when you get a little bit more advanced, you can shift that. You can play with that. You can play with that metric. But initially, that's how you need to move. Then there's no anxiety, man. Even if this trade turns around and goes to hell, yeah, you'll still be okay. You'll still be like, yeah, I'm all right. I'm okay. We'll get there in the end. We've seen so many of these trades come back to entry and then go all the way back to space. You don't want to be that guy that's like, oh, the trade came back to entry and let the trade live. Manage your risk and then just let the trade live. That's what the trade wants to do. It wants to live. It wants to be free. Yeah, it wants to be free. Manage your entry and let the trade be free. Let's have a quick glimpse at our GU. Ooh, let's just do it in one screen. We saw the liquidity, this is what we was talking about. We saw liquidity being taken from these levels here. We only take trades after liquidity's been taken. Liquidity was taken here. All right. From time that market started to break that liquidity, we had a beautiful manipulation breaker structure. W, I circled it. I circled the area of interest this morning. If you was on the call for me from morning, we saw this manipulation W appear out of nowhere. Look, there's no manipulation W's here. There's none here. There's none here. Even if there was some here, they're in the absolute wrong location. But this one is here, out all of a sudden, in the right location. What are we waiting for after that? We're waiting for this market to tap in. What can we see here? The market tapping in. Tapping in. We take the trade, we execute the trade, and now we are in nothing but the profits. Now we are in profits. Now we are making the monies. And where might this trade go? It might be going up here to go and capture the other opposite side liquidity. Either way, when we got to a 1 to 3, we took 50% of the trade off and we moved our stop loss to entry. Meaning that we cannot lose, and we've actually taken 50% money. We put our money in our pocket and we can't lose. Do you see it? Does everybody on here, do you understand? Do you understand our strategy? Do you understand the psychology? Understand what I'm trying to get at?
Yeah, but what I'd say is zoom in, like proper zoom in on the structure.
Just zoom in on the structure. This is proper zoom in on the structure. This market was, let's rewind. This market was here. London session started. All right. I do not want to take a trade until liquidity is taken. So I identify this level here as a liquidity level below London session lows from Tuesday. I also identify some additional liquidity levels below this wick here, because though this is not a specific session low, this is an area that boom, the market exploded breaking structure from. I can't ignore this liquidity level here, so I mark it. I also additionally mark some more levels. All right, I watch this market here come and take liquidity. As soon as it takes liquidity, it creates a green man for me to start crossing the, oh, whoops. It creates a green man. Cancel that. What have I done? Let's just do that. It creates a green man for me to say, okay, I'm going to trade. Let me rewind it again. That was too fast. Let's go here. Make this one speed. All right. As soon as that liquidity is taken, then I start saying, okay, something's happening. Boom, liquidity is taken. Something's happening. I'm ready now. Finger on the trigger. Yeah, finger on the trigger. Liquidity's been taken from this level and from this level here in within my London kill zone session. I've made this circle, finger on the trigger, but I'm waiting for my manipulation M pattern. Have a look. I see the markets come here, push down, taking liquidity, push up. I turn to my line chart to give me some clarity, to make sure that my eyeballs can see what needs to be seen. I can see my manipulation W here. If you want me to zoom into it more, because you've got cataract or you're looking at it on your phone, that's it here. Have a look. Yeah? Can you see it? Can you see it? Can you see it? Somebody tell me that they can see it. Somebody tell me that they can see the manipulation W. Can you see it?
Where's
Yes or
the-
no?
Live and direct.
Yeah, I can
Because
see it.
because I'm telling you the strategy. I'm currently 2,800 up in those three positions. All of them are blue. I'm lying, in fact. Sorry. One of them that I was in was stop this entry, stop me up. All right, but I'm still 2-9. In fact, I'm 3-2 up. We're gonna go and look at them in a minute. That was our manipulation W. I started the session saying we only take trades after liquidity's been taken. Well, liquidity's been taken. Tick. Where's my ticks at? Tick. Liquidity has been taken. Manipulation W turned up. Then the market had the cheek. Yeah, displacement is happening. Big, strong green candle has happened. Then the market has the cheek to tap back in. Yeah, to come back and make that retracement and tap back in. Yeah, once I see this retracement happening, guys, I'm getting involved in the trade, man. I'm not on a long thing. The market has retraced back into my W. Now, yeah, we might be turning around and saying the market didn't come all the way down here. That might be because of Owanda's candles. It might be because of whatever it may be. Either way, I've seen this manipulation W happen, come, and a retracement happen. Even if you was trading indication, correction, continuation, you're in the trade. You understand? You've broken some structure. Here, indication, correction, continuation, you'd be in the trade if you've taken that. But me, personally, when I see this W turn up like this, in the right location, then I see the market tap back in, I'm in, mate. I'm in the trade. Yeah, you don't have to ask me twice because I've managed my risk and I leave the rest to God. Yeah, the rest is on God. It's got nothing to do with me. Yeah, and if we go here, 10 speed, see it moving in waves up and down in waves. There you go, and we're up here. And where might we be going? Here's my target. Do I care about it at the moment? No. Why? Because I've taken off 50% and the rest is on God. And those, look at those trades, bar to bar, we'll get rid of this one here. The reason why we get rid of that one, because that one was risk-free, to be fair, and I was a bit concerned about that. And anyway, when my screen must have blinked, it took off what I said I was looking at. We're here. All right. We're here and we're seeing what's going on. Yeah, both blue, gold is ramping. Gold could turn around. Do I care? Everything's risk-free. I don't care. All the trades are risk-free. And they're left to God. Yeah, that's it. Any questions, guys? Any questiones? If there's no questions, I'm going to love and leave you, let you guys get on with your day. I will be here as much as I can be in regards to things. A couple of days I thought I was going to be here there, Jeeve, and I've had to go and pick up the little guys and whatnot and had to do daddy duties. You will know one day. Yeah, one day when wifey puts it on you and says, today, it's this, it's that, it's the other. You got to do as you're told. And certain times that's what happens, yeah? So look, what I'm going to do is I'm going to put something on that we can get some education about. I'm going to play something first about current affairs, so what's happening in the world, because sometimes we don't know what's happening in the world. What's happening in the world at the moment, guys, and we have to always be grateful about where we live. In fact, let me stop the session. Let me stop that live. All right. We have to be grateful for where we live. In current places in the world, they're going through storms, crazy storms. Yeah. And I think it's in Florida right now. They've got some deadly, crazy category 5 storm that's happening. All them things that you watch on Netflix, all them kind of storms are going on. Yeah, and luckily in the UK we don't have to deal with these things so much, and we have to be